Hey everybody, Jim Malone here, coming to you live on Dallas trading floor. Well, the Dow has reversed higher, which is kind of good, and it looks as if we're pulling back. We're still in a correction, and I think you ought to be very careful about initiating any new positions right now because it's looking. The Dow is the market is pulling back. The NASDEQ is kind of on the precipice. It seems like the funds are moving to the Dow, which is significant, but it's a good time to be a little bit careful in the market. I've reduced my positions significantly. I do have some trades on, but I'm being very careful about that. I'm mostly in cash right now. Just wanted to kind of give you a look at the market direction here. The NASDAQ is up. It's bounced, and it looks like it's trying to retake that very critical 13,000 level. And so, that's kind of where it's at currently. We are still in a market in correction. So I do recommend, possibly taking profits right now. It's a good time to take profits if you have them. I do think we're going to head lower. I think this is a sort of a dead cat, what they call a dead cat bounce. And I do think it's moving. It's going to start moving, lower again. So we better be careful. And I'm proceeding with caution. That said, I put together an interesting trade today on Discovery Networks that you might be interested in, and this is based on them adding a new service, basically, $4.95, and it's going to be sort of kind of like a Netflix thing, and it looks like it's going to be very strong. And there's been a lot of call buying on Netflix, so Netflix, on Discovery Channel, symbol DSCA. So not everything in the market is pulling back. What I did is I put together a little call spread on this that basically has a 3-to-1 return. So and I put that out there to everybody, of course. On TikTok, I do have a way to take a look at that as well. I'll show you the little blurb later in the show. But basically, most of the market is pulling back, so you have to be very, very careful in this market. I kind of want to show you the QQQ and see how this has bounced back up. Here we have a chart of the Qs. And as you can see, we pulled down very heavily yesterday, and then we've bounced up with and that's typically the way a decline works. Is it will pull down and then it will correct up, and then it will pull down and correct up. We are still in a market trend under. We are still in a correction, so it's over 10% between the high basically here and the current. So we have to be very careful. Trim your positions, even though it's trending up today. You have to be careful because, again, the market does not come down in a straight line. It basically will pull down and then pull up and then pull down again. I'm looking at some very interesting stocks. This stock is down today. I don't have this one in the portfolio, but I do probably will be adding it when the time is right, and that is Airbnb. I think everyone has heard of that. Now, this, interestingly enough, I do think that Airbnb is going to benefit tremendously from the reopen trade. This is not a stock to buy today, but it's a stock to watch because I do think we're going to see a very strong motion on it. Currently, it's down 25 cents when the slide was taken. The volume is up, though, and I do think that we are going to see a reversal on this one. But right now, you want to kind of put this on your watch list because I do think, it may have some very nice upside potential. I just want to kind of get a look at my holdings currently. This is sort of what I have out there. And basically, I'm still in Ford. It's up today. Of course, this is all a bounce. It's sort of really gone nowhere. It's pulled up and pulled down. I'm in Ford. I'm in Halliburton, Rent-A-Center, and Granite Construction. They're all up today. Significantly, but remember, this is a dead cat bounce. I'm also in Lululemon. I shorted that. Basically, I shorted that on Wednesday. I increased my short position on yesterday, It's bouncing up a little bit. I do expect this one will collapse even further. So that's kind of my take on on that. So without further ado, let's get to some of the slides here. Let's see. I'm gonna pull this up, and so that's kind of the situation that we're in currently on that. So I'm going to just open up the charts and let's get started here. A little bit of a lag on some of my internet again, unfortunately. I wish it wasn't this case, but it seems to be. So we just have to bear with it and do the best we can with that. So without further ado, let's take a look at the questions. Thanks for holding on here, and let's see what we've got. Okay, great. Hi, Jim. Thoughts on GPS and NOV? Well, let's look at GPS first. Here's the thing. I really right now the market is correcting, so I think it's a very difficult time. This is this is a good time to build a watch list. I wouldn't recommend going into too many positions right now, just because the market is correcting. It's bounced today, but that doesn't mean that it's going to it's going to continue that tomorrow. And this is the gap. So let's take a look at the chart for the gap here. And let's see. Okay, well, we've got a blue dot, so that's good. Definitely a pull up here. Now, here's the thing about the gap. This is symbol GPS. You would think it would be gap, but it's GPS. That's the symbol on it. It has a very nice buy. So obviously they had some they've come through earnings, which is interesting because their earnings were down. But I guess this is sort of a reopening trade. This is a blue dot. Making it to potentially a very good trade. Let's look at the weekly chart here. Well, the weekly chart is good. It's just pulled. Yeah. Okay. So this is definitely a good buy. It's a cup at 2020. Basically the pivot is 26.99. Excuse me. On that, I think this is an excellent opportunity. Obviously. Wow. Okay. So here's the thing. In this market condition, let's look at the checklist. It's 66%. So that is definitely in my range for buying. I do like to buy them, at about this level. So I would say this is definitely buyable. But here's the thing. I would be really cautious about buying a position now because of the market condition. But this is buyable now, and I would only have a quarter position on this one currently. If I went into this one, I'm probably retail has moved very nicely. So So what I mean by quarter position, well, if you took the total value of your portfolio and you divided by 8, that would give you 8 positions. A quarter position is a fourth of an eighth position. So it's just kind of a starter position, but I do believe, based on this chart, that it's looking fairly decent. And I definitely think that this is buyable right now. This is a gap or GPS. That's the symbol. And thank you very much for that, from Matt. That was a good question. NOV is the other one that you were asking about. So let's take a click at NOV. Let's see here. NOV, huh? Okay. I don't know much about this company. Wow, it's up 13%, and it's definitely in a buy. I don't like the relative strength, but let's take a look at the chart anyways. I'm just gonna switch from the weekly to the daily chart. This definitely gapped up, and it's definitely moved past the buy point. This is a little extended right now. I don't like the fact that it has a 42 relative strength, but it's in the oil and gas machinery, and I like that area a lot. Again, I definitely like this stock. I mean, I think you've picked two very, very good ones. These are both stocks that are setting up, set up very, very nicely. And there's a lot of buying in this. So this is also buyable. Wow. 2 for 2. That's terrific. This is definitely buyable as well. So I think, NOV. So I think this is good. I especially like the fact that this is in the oil and gas area, because the oil and gas area, and I just want to kind of show you this. We can see it up here. It's 19 out of 197, so it's in the top 20 largest sectors of the economy right now. There is a lot of capital that's flowing into the oil and gas sector. So I probably, between Gap and this one, I think I like this one the best. Let me just kind of take a look really quickly to see if I can find some potential competitors, and I think that's really, really interesting. Let's look at GTLS, this Chartlands. That's another one that's doing fairly well as well. That's also in the same sector. That's got a 95 relative strength, which is very, very good. But let's compare that with NOV. See kind of where, this is okay. Here's the thing. One of my only concerns, of course, is the relative strength, the lower relative strength on NOV, in terms of where it tops out. This is a significantly lower one. But let's take a look. I just want to look at some of these ones that are charting very high. This FET, this is another one that's charting very high. Forum Energy Technology. It's also in the oil and gas machinery and equipment area, which I really like. I like this area a lot. This is a little extended. This isn't quite as good as the other one, just breaking out of a buy point. But this one also, you might want to possibly take a look at this one at GTLS. So let's see if I can do a comparison. I don't know if I can do a comparison. I'm going to try to see if I can compare some of these stocks together. Well, I don't know if let's go to the monthly. Yeah. Okay. So that's okay. Well, I definitely like NOV. I don't know if I would, I would be buying it right at the moment because of its low relative strength, but everything else looks very, very good. So I definitely like your thinking. I think that's very, very, very smart. Let's see if I can reduce the size on that. There we go. I'm just fooling around with the windows on my machine here. See if I can get this a little bit better here. See if I can change the windowing here. It's just not letting me. There. Okay. It's just not letting me do it. Oh, goodness. Come on. There. Okay. Now I've got control of that window. Okay. So after that little ado, let's see what we're doing. We're still in correction. Yes, we are still in correction. We've been in correction literally for one day. Expect corrections to last at least a few months. I do expect that there is going to be more of a correction. I do think we're going to be in more of a correction. Today, we had what they call a dead cat bounce, which is a bounce on it, but we're definitely not. We're still not there in terms of everything. So be careful initiating new positions. Okay, let's look at Amazon. We are in a correction, and it's a difficult time to buy Amazon. Don't just buy it because it's up today. With Amazon, it's not like it's on sale. We are in a correction, and this can be a relatively difficult place to buy it. Here we go. So here's the chart on Amazon, and basically what's happening here is we're pulling down below the 200-day line. This is significant because because it's the 200-day line that basically is we don't want to buy anything if we can avoid it below the 200-day line. So let me zoom in on this a little bit to see if we can get a little better see at that. Okay, it's coming up there. There we go. Okay, so and then it'll hopefully be, yeah, there we go. And it's getting bigger as we speak. That's a good thing. All right. I don't know if I'm already there or not. Okay, so here's the chart on Amazon. As you can see, all right, I'm still waiting for a cursor here on this, but basically what's happened is it's pulled below this very significant black line here, and that is the 200-day moving average. Currently, the money is flowing out of Amazon. It's not a good time to enter a position right now on Amazon because it's below this line. So we want to be very, very careful initiating any position on Amazon. So here's what I would do with Amazon. I would be looking to watch list. I would be looking to watch list Amazon right now, and I just think that it's not an ideal time to be in Amazon. It is pulling back. See if I can get that. There we go. All right, it is pulling back. So let's take a look at CMG, and that also has been I'm having a little bit of bandwidth constraints, unfortunately. Wow. All right, there we go. Chipotle. And Chipotle has been a winner for quite a long time. But as you can see, again, we have a situation where it is pulled back down. It's pulled back down to the 200-day line. This is not a good place to buy Chipotle. Don't buy it just because it's on sale, because this is looking like it may pull even lower. So even though they had a very, very good earnings story here, Chipotle just isn't in a good position to buy right now. It still has an excellent checklist at 66%. This is my minimum for buying, but right now the market is pulling back and Chipotle has pulled below the 200-day average. Now, what it may give us another opportunity, but if you look at this chart, and I don't know if you could see this, it's tested the 200-day line. The last time it tested the 200-day line, basically was right here, okay? And what happened was it pulled way down and then it moved back up. But so the test of the 200-day line is very significant. As you can see, it tested it here, and then then it sold off. I think that's exactly what's going to happen. Again, it's tested the 200-day. If it moves decisively below this, it's going to pull back, and then eventually probably will turn around. But we don't want to probably be around for that. So here's my advice on Chipotle. Chipotle is below the 200-day line, so it is not viable. Don't buy CMG below 200-day moving average. There we go. And this is critical, because if we buy it below the 200-day moving average, it may continue to move lower as it did here. So that's my advice on Chipotle. I think with Chipotle, you just got to be super careful, and it's just not the time to buy it right now. So okay, so let's I'm going to take a quick call from TikTok. What's your advice to long-term investors for take advantage of a volatile market? And why this? Okay, wow. it just there my machine is I'm just having some bandwidth issues. The my advice here is right now to get into cash, because what's going to happen is that there's going to be opportunities. As the market pulls back, there's going to be opportunities to buy many of these great stocks on reversal. Right now, it's not a good time because the market in general is pulling back. What I want to show you here is the QQQ. This is the NASDEQ 100, and this is typically where many of the best of the tech stocks are. And I'm just going to show you a daily chart of that right now. And as you can see, and we'll put it back up here really quick. There we go. Hopefully we should get a picture. There we go. We're having some bandwidth constraint issues. You can see it's pulled back. It's bounced today, and that's a good thing. It's bounced up significantly, but I suspect that it's going to pull back down come Monday. So I think we got to be really, really careful right now in this market. The best thing to do in this market is to get into cash and wait, because we're going to have some opportunities that may be very, 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 very beneficial. But right now, I think we've got to, to get into cash. So let's see what to do here. Okay. Just want to show you a little it looks like Discovery Channel may be offering a very interesting offering, $4.95, and this might be a catalyst for a bull call spread. According to John Najarian, the April 16th 65 strike calls for DISCA Discovery Networks has seen unusual opportunity, and this may be an opportunity. Here's what I did today. I bought two 65 April 16th 65 strike calls, and I sold also some 75s for a total outflow of $574. The maximum risk on this trade is $574, but the maximum return is $14.26. Here's an expected chart of the payout. To get access to the full slide set, go to this address above, sendfox.com/LP/197NXN. Thanks for watching. Sorry, I have a little bit of lag on the machine. The internet has basically thrown me a not allowing me to show this. I have a frozen screen on my other one. So try to take as many questions we can on TikTok. I've got a see if we can add to the stream. Okay, great. So I'm sort of in there again. I'm sorry I got knocked off and was trying to show everybody this, what was going on here. Basically, and on the right-hand side of the screen, you can see my TikTok feed. It pulled through this 40-day line, and this is very critical because this line basically is sort of the line in the sand. The last time it happened was way back here in November. Whenever it tests like this and it moves lower, that means there's going to be a correction, and that's the reason I think it is going to go lower. I do think that the NASDEQ Composite probably will move possibly as low as 12,000. So there is a movement of there's a movement out of the market right now. I know that this is very hard to fathom because you're like, well, the market's up today, I should be investing it. No, what's happening is that we're having what they call a dead cat bounce. Now, I know it is not apparent because I am totally basing this on technical indicators and not individual stocks. So that is the reason I believe we are going to be moving lower on at least for right now. The market is crashing as we speak. Well, I don't think it's crashing, but it's definitely moving lower. Let's look at the Qs. QQQ. That's an important one to look at. There we go. There we go. Okay. It's, as you can see, the Qs have pulled up. They pulled down and then they've bounced. But that's a classic dead cat bounce. That's what they call a dead cat bounce. So that is something that we have to be very reticent of. This bounce here is a dead cat bounce, and I do think it's going to be pulling lower. It's tested, and it probably will move lower. It looks like we're back to questions from YouTube. Thanks for holding on. Should we sell profit stocks? Like absolutely. Thank you, Carl, for this. Thank you. This is a very good post. I think you need to sell profit if you're profitable in Microsoft. Now is a good time because the worst thing you want to do here when there's a correction is to get faked out. And I think that's kind of what's happening. Let me show you the chart for Microsoft. It's pulled down below the 21-day exponential, and then it pulled below the 40-day, and it's bounced back up. But the question is, will it be able to hold? I don't think so. I think that this is indeed the chart. Now would be a very, very good time to sell and take profits on it. Now would be a very good time to sell and take profits on Microsoft because it looks as if it may actually trend lower. So that's the kind of thing that that might work very, very well for you right now. So here's what I would do: sell and take profits now. So that's what I would recommend on Microsoft. I think that's very, very astute that you're saying that, Carl, because that is definitely what I think what I think you should do with that. So that's kind of my opinion on that. What's going on? Well, I had a little bit of a technical difficulty here, and I lost my internet connection to my streaming service. So that was what was going on. So I apologize for that. I had to fumble around like a blind man. You're no sound on YouTube. Okay, thank you. Let's see if I can get. Let's make sure that I can get sound. No, I definitely am not. Okay, let's see if. Oh God, darn it. Am I? I don't think I. Okay, maybe this will work. There we go. Okay, so now we should have audio on this. At least we should have audio. But golly, all right, let's look at audio, see if I can. No, it just doesn't want it. It just doesn't want to. Let's see if I can stop and start it again. Hold on. Well, let's see if I can get the, see if that has, well, let me see if I can leave the studio just for a second. I, I don't know what's happening with the sound. I'm sorry. God. All right, let's see if I can get this one. Wow, I don't know what's going on there. Sorry about that, everybody. My whole thing cut out. I've been having a lot of internet bandwidth issues. Like, this building should have excellent bandwidth, but for some reason, I just, it went south. So I apologize for that. Let's see if we get back to the questions. Thank you for holding on. Thank you for being so. Thank you for being so so patient here. So hopefully we've got this now. Okay, great. Let's see. We have any question? Okay. Yeah, I am so sorry about this. Okay, great. The sound is good now. Finally. Sorry about that. I've been using StreamYard, by the way, so that might be the issue. Okay, great. Okay, I think we're back now. And again, I I really apologize. for the for the issue for the issues there. So let's see if we can get back to back to the slides here. All right. I'm just going to go into MarketSmith. Right. Open the charts. There we go. Thank you for being so patient on that. Let's share the screen. Up. Oh gosh, I need a very much. I need a producer because I'm doing this pretty much all myself, and it seems to be not not the greatest. But I think we're back online here, and thank you for everybody for hanging out with the amateur hour here. Okay, let's take a quick look. What's your take on Ford? Okay, so let's look at Ford. I'm in Ford, by the way. I just wanted to tell you that I am in Ford. There we go. Yeah, okay, there we see it. Okay, finally. Okay, so let's take a look at Ford here, and see how it's moving. It's pulled back down. It pulled right to the 21 day, and it's pulled up. Ford is still in a confirmed uptrend. So that if you haven't initiated a position, I wouldn't recommend going in very heavy on this, but I do think that well, oh goodness, it doesn't seem to want to let me draw. There we go. There. Okay, so we're still moving very nicely in Ford. It did pull up basically into this trend. There is a channel, so I am pretty bullish right now on Ford. I wouldn't necessarily go into it with any more than about a half position, but I do have positions in this one as well. Currently, its industry group is pretty good. The checklist has improved. It's 77%. So right now, I definitely like Ford in terms of in terms of a play. So that's kind of the way I would recommend. Okay, let's go to some stock recommendations. Wow, I have been kind of delinquent on this. So let's go to some stock recommendations. I want to show you a chart of Discovery, DISCA, which is basically a I want to show you this chart. I'm going to show you the weekly chart, and there's been a lot of buying of options on this one, and I put out for the report. I put out a bull call spread on this one, and this is one I kind of do recommend at about 65 level, and currently it is trading basically at get a break here. Come on. Where is it trading? Yeah, it's trading at 64, so it's almost there right now. I did put out a bear call spread on this today, and I will show you that here in just a second. Let me see if I can get this this clip to run here. Let me see if I can get this clip to run. I'm just going to run a short file here, and hopefully this will run this time. I think I've got a better connection than I did before. So here we go. Well, it looks like Discovery Channel may be offering a very interesting offering, $4.95, and this might be a catalyst for a bull call spread. According to John Najarian, the April 16th 65 strike calls for DISCA Discovery Networks has seen unusual opportunity, and this may be an opportunity. Here's what I did today. I bought two 65 April 16th 65 strike calls, and I sold also some 75s for a total outflow of $574. The maximum risk on this trade is $574, but the maximum return is $14.26. Here's an expected chart of the payout. To get access to the full slide set, go to this address above, senfox.com/LP/197NXN. Thanks for watching. Okay. Okay, great. We're back. We're back now. That's a little uh, thing I put up there. You can go to sendfox.com with the address, and it will give you it will definitely you'll be able to register to get the slides on that. What it is it's a bull call spread a bull call spread that I put on. So it basically activates at about 65 and up. I bought calls on. I bought 65 calls. And I sold the 70s. So this is out pretty far. This is about out in April. So if you're interested in this, you can definitely you can definitely get it by going to that address, and hopefully I'll remember that address. I should have had it hardwired in here first, but that's one that I do kind of recommend is Discovery Networks, and I did put that out as a video on TikTok. So if you're on TikTok and on YouTube, by the way, you can get that address by just going to the YouTube channel at www.DallasTradingFloor, www.youtube.com/DallasTradingFloor, and you'll see that video that you can get that. But anyways, that's Discovery. That's kind of one that I do sort of recommend there as well. So let's take a look at the next one. Amazon. Okay, I did go over Amazon a little bit, and it's pulling back. I would not recommend Amazon at this time because it just isn't the chart doesn't look good. So I'm gonna show you. Don't just buy Amazon because it may potentially be on sale. I want to show you I want to show you the chart now. Well, hopefully I will be able to do that. So, well, no, that's the wrong one. There we go. Okay. Oh man, I tell you, it's the Keystone Cops with me today. All right. Here's the chart for Amazon. As you can see, it's pulled way back, it's pulled down, and it is fallen through the 200-day moving average. Not a good thing to buy a stock that has fallen below the 200-day. It's just not a good practice to be buying this right now. Even though it has bounced a little bit today, I think that it's going to pull back some more, and it may test. It basically pulled right to this level, 2871, and then it bounced, as you can see right there. So I do think that it may move higher, but never. I never like to buy anything below the 200-day moving average. It's just not a good look on that to do that. Just not a good time to buy it. So that's my input on Amazon. I think you might want to watch list this one, but it's not a buy at this point. Love to hear about C3 AI. And that's an interesting stock. I was in it for briefly. Because and this is kind of going to be a hard thing for a lot of people because they haven't been in the stock market a long time. But there are times when the stock market doesn't favor growth stocks, and we're sort of into one of those times right now. I'm going to show you the chart for AI right now, and basically the situation there, as you can see, this is the daily chart. It's pulled back massively, and it's just it was looking good, but now you just got to avoid this one totally because it's just not the kind of chart you want to see. 44% on this one, it's not where you want to be on this chart at all. So as you can see, it's a downward slope. It has bounced, but save your money. This is not a stock that you want to be in right now. So AI is just not going to be the kind of stock that you want to be in. All right, let's take a look at the SQQQ. That's a good question. I do think that with the SQQQ, it's not like a regular. The SQQQ is not like a regular stock. It's basically a hedging. It's a hedging vehicle, and so it's very volatile. So I'm going to show you the 60-minute chart on this one. And it looks as if it is pulling back a little bit, but it looks like it's bounced. I wouldn't hold, I think we're after the hours, but I would be careful holding this thing through the weekend. because it could turn around. But here's the thing: I don't, I wouldn't. I think if you put a 7% stop loss on this one, I think you'd be fine. But it's still not time to take off the SQQQ. I do think we're pulling down, and this one again moves against the Qs, so we have to be super careful when we put this one on. But that's a good question. I still don't think, Harris, it's time to sell this one. You might want to take half the position off. But I do think we're going to see some more volatility on Monday. I really do, and based on a lot of the indicators that I've got, the market is pulling back, but yet the market has pulled up. That's what they call it. This is a classic, what they call dead cat bounce, and it is an issue because it's because it may be more problems. So the SQQQ is a very good defensive play. At least in the short term, but be very careful, because when the market turns against you with the SQQQ, you've got to be out. So I recommend putting a stop loss on this one, but it's a tight stop loss, maybe about 5%. So that's a great question. Really appreciate it. How long have you been trading? Wow. Well, on and off, I've been trading since the 80s, actually. God, I'm so old. Yeah. Not with as big accounts as I've had. As I have now, but I started out with $500, in 1984. So there you go. I wasn't really doing it. I mean, I was always doing something else. I was a financial analyst, worked for a number of the big four accounting firms, but yeah, I mean, I've been doing it a while. I've really full time in the last about 5 years. So thank you for that question. All right, BARC. Let's look at BARC. Did I get that right? BARC. There we go. Oh, doesn't have to give me, unfortunately, have to get a different symbol on that. That doesn't seem to be working. Sorry about that. I have aces and tan with a gain of 30%. I have already taken investment at some price. Do you think yes, I think you should. Yes, Chris, I think that is a very good idea. Let's just I want to analyze these charts to see. I think that's excellent. ACES. Aces. So wow. That's interesting. Okay, well, let's look at the daily chart on this one. Yeah, I definitely think it's time to get out of this one. I think it is, because it is pulling back. We're still above the 200-day line, which I think is excellent. Boy, you must have really bought this right, because you probably bought it right down there. Wow. I would be selling this one. I would be selling right now, because I think you've got some nice profit, and when you have nice profit, that's the time to be selling, because you don't want to round trip it. It's hard enough to make the profit, so you want to keep it. That's the main thing. Let's look at the other one, and that's Invesco Solar. Yeah, I think it's time to be kind of looking to get out of the solar area, and there's a lot of reasons for that. Mainly because there's a rotation out of those kind of stocks. A few months ago, they were just doing super business, and they were top of everyone's list. But there is a rotation going on. I kind of wanted to show you that, because I think it is fairly significant in terms of that. So let's go to the there we go. And I'm going to look at the industry groups here. Okay. Let's look at the industry groups. Sorry to say, I should have this one at the top of my list, but I don't. Well, there we go. Wow. There we go. Okay. So let's look at the top 194 industry groups here. Currently, the number one group is, and let's sort them correctly. There we go. Okay, so currently the number one energy, well, okay, solar energy is number one. So I stand corrected. Oh, okay. I'm sorry. It's starting to fall. Yeah, that makes sense. The industry group for solar, which is the one which TANS is in, was number one basically through 3 months ago. It's currently number 7. Now it's falling. So it might be a good time if you have profits to take them. If you'll notice, some of the ones that have been coming up very heavily as mining, energy alternative, those kind of things. So those are kind of where we kind of want to do our treasure hunting. You'll notice that oil and gas is moving up here very nicely, and so some of the other ones are here. Metal products, interestingly enough, distributor, and computer integrated systems. But mining, alternative energy, and auto and truck equipment. So that's kind of where we want to look for them. So if you have profits there, it does look like there is a movement away from this area, and that being the case, we may see, you may have seen your top profit there right now. So that's something that I think you might want to consider taking a load off. I really think so. All right, what do you think of investing in VXXX? I don't know VXX. VXXX. It sounds like a SPAC to me. It's not recognized. Well, it's not recognized. Oh, I guess this is probably an ETF, vaccine ETF, VXX. Oh, this is the VIX. Okay, I think you mean VXX is the one I think you're talking about. And this is VXX. Basically, it's a VIX fund. I don't know. I'm really of 2 minds. I think you probably should avoid it. That would be my guess, just because I think you could run into some difficulties there. Thoughts on Fizz? Okay, Fizz is kind of cool. This is called National Beverage. It used to be called Shasta, FIZZ, and this one was doing great. It sort of has it's sort of moved a little bit. It sort of moves a little bit down. Let's take a look at the weekly chart here. It spiked up and then it's pulled back down. Basically, still kind of, there was a short squeeze. This is sort of one of the, like the GameStop type stocks. It was heavily shorted, but it's still a sound company. I mean, this company has real earnings, and but as you can see, it's pulled right back down. There was a buy point on it. A cup at 50. This is the one that's sort of this is sort of a Wall Street bets type stock. Was heavily shorted. There was a short squeeze, and now it's coming back. So, I don't necessarily think this one is bad because, again, they have a real product. It's a little bit lower. It's got a good checklist, and it's in a fairly good. It's not in the greatest sector, I hate to say. 179 out of 197. So that is an issue, but overall, this is not a bad stock. I wouldn't have this as a core investment though. That would be my gut. I know that the Wall Street bets people might be touting it heavily, and I understand that. So that might be a thing. So I can't really get behind all that much. It's not a bad stock though. Not a bad stock, not at all. Let's look at XL. Take a look here. And there we go. XL Fleet Corp. Okay, why am I getting... Let's see if I can go to the weekly chart. Take a look at it. There we go. There's the weekly for it. Don't know what to say here. Let's kind of look at some things here. On this one, yeah, there's no earnings. It looks like auto truck replacement parts. This is not bad area. I just 44 checklist. I think you want to avoid this one. Yeah, I think you want to avoid XL. I think you want to avoid it. Let's look at DTIL. Let's see if we got on that one. DTIL. Precision Biosciences, biotech company. We had some nice sales increase. That's good. A lot of selling. Yeah. No, this I think I think this is I don't think you want this one. I just think there's too much selling going on right now, and it's not. It's the 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 market the market condition has changed. So I think that you probably want to to maybe watch this one, but don't buy it. So that's kind of my watch. Watch, but don't buy. Yeah, watch, but don't buy this one now. So that's kind of my thought on that. So let's go to the next question. Thanks for holding on. Thanks for sticking through my my terrible my terrible stuff with the bandwidth here. What about the stimulus package? What do you think it's coming? Or buying the rumor, selling the fact. Always buying the rumor and selling the fact. This is something that this is something that you always do. Always try to buy on the rumor and sell on the fact. I think that now that the Democrats have won the both houses, they're not going to do the stimulus. They're just it's sort of loosening the football. Everybody bought the everybody bought the hype, and they're not going to do this. They're not going to do the stimulus. They're not going to do the stimulus. I hope that they won't crash the economy, but they're not going to do the stimulus. I don't think so. I wouldn't be too. I wouldn't be. I think that was put out there to lure people in. I think a lot of people drank the Kool-Aid, and there you go. So I think the market is probably going to retreat, at least for right now. If the price, this is great. The price of oil rises $10 a barrel, $70 a barrel. In addition, banking and finance are doing very well. Absolutely. You're right on this one, Harvard. You're right on. This is totally correct. Basically, they are constraining the supply of oil so that the price will go up, and this is part of the reason is we have a lot of lobbyists in Washington D.C. from the Saudi government that want to get that price up because they depend on that high price. So that's why they killed the XL pipeline, and that's why they're getting restrictions on drilling in the United States. It's to push the price of oil higher. So I do think that oil stocks will do very well. I do have a position in Halliburton. I think Halliburton will do very well. I think the price of oil is going to go up, and I think that's absolutely true. Now, with the financials, I think you got to be a little bit careful. Try to avoid most of them, like Wells Fargo. I don't think they're very good, but there are some like Goldman Sachs that are excellent. So that said, but I'd be very, very careful because I do think that we're going to see a lot of inflation because all of this money that's been put into the system, it's got to go somewhere. And I think that's going to go into prices. And one of the primary drivers of prices, inflation is the price of oil. And with the price of oil going up, I do think that we're going to see the growth stocks, the ones that I like to trade, the QQQs, they're going to see that probably retreat a little bit. We're going to see a movement into some of the more traditional value type stocks, those being primarily the oils, because the oils were beaten down so heavily when there was the rally in tech stocks. So that's a very good that's a very good observation, Harvard. I think you're absolutely right. I think you're right on the money. So it's the same as SQQQ. Well, actually, what the SQQQ is that it is an exchange traded fund that basically trades against the Qs. So the QQQ is the NASDEQ 100. It's the fund for the S&P 100. Now there is a fund called the SQQQ, which trades against that. It trades in the opposite direction. Right now, because the Qs are going down, the QQQs are going down. the SQQQ, at least in the short term, may be a good investment. So that's what it is, a hedging vehicle for the NASDEQ 100, basically the growth stocks. If the growth stocks are going down, that's when you want to look at possibly putting on a trade with the SQQQ. So that's the SQQQ. Let's look at ABG really quickly. Let's look at ABG. ABG. And let's see with ABG. There we go. Asbury Automotive Group. I'm not familiar with Asbury Automotive Group, but here it is. Here's the chart on. Looks very nice. Relative strength of 87. Just not really any base, any place to buy it, but just moving right up very nicely up the 40-day line. So that's actually looking good. Let's look at the daily chart on it. Yeah, okay, very nice. It did pull back and tested the 21-day exponential, so that's good. Unfortunately, there's not really a great place to buy it, but it looks very good. I mean, look at that volume spike there. I like seeing that. It's got an 87 relative strength, and it's got a 88 on the checklist. That is terrific. This is a very good buy. Look at that. And we have very nice fund sponsorship, 486 funds in it. Let's look at the industry and sector. It's not the greatest because it's automotive retail, but I think automotive retail should do well on the re-upping train. There's just a lot of people that need cars. There is another one in this group called Lithia Motors, which is also excellent. But I think this is a very, very good one. So what I would say on this one, I would say that absolutely this is this is definitely buyable right now. So I think this is buyable right now. Now here's the thing with because the market is pulling back, I think you have to be a little bit more careful buying right now. I think you got to be careful in that you don't initiate positions that are too large. But I do think this one is buyable. So I would look at possibly a quarter or maybe a half position. Now, what do I mean by that? Well, if you take your entire the portfolio value, and let's say you had a portfolio value that was $8,000 in value, you would divide that by 8. That would give you 8 full positions. I would recommend a half position. So if it was 8 full positions, it would be $1,000. So I would recommend investing only with a half position, or about $500 in that, if the value of your total portfolio was about $8,000. So I know that's kind of confusing, but this is definitely a good one to move into. I do think there's going to be increasing demand for vehicles. Now, even though interest rates are going to be creeping up a little bit, I don't think that's necessarily a problem. At least from where I'm sitting in Dallas here, and Dallas is a very big car city, I do see that there is plenty of demand for cars, and especially used cars. So I think that may be a very good, very good one. So thank you for that. Very nice. All right. Worst trading advice. What's the worst trading? Oh, I have made some dandies. Recently, what's the worst trading segment I ever made? Probably. I'm just trying to think of a really, really bad one that I've made lately. Well, one of them was waiting too long to cut my losses on. No, it wasn't losses because I had profited. Waiting too long to sell Tesla recently. I made some great profit on Tesla in the first 4 weeks of the year. And what did I do? Well, I got greedy, and I should always sell into strength. So I should have taken off more, because I round tripped some very nice profit on Tesla this time. And of course, then I just pulled out. So that's, at least recently, that's the worst that I've done. The reason is because I try to cut my losses very, very quickly if the trade isn't working. So I typically, but I believe in Tesla, and I still believe in Tesla. I will be buyer again once it bounces. It's pulling back right now, but at least in the short term, that is my biggest regret, is that I didn't sell into strength. I didn't lighten up on my position in the Tesla because it went up and then it pulled back, and I round tripped some of my profit. And that was not a good thing. So that at least in the short term, that's the real mistake that I can remember doing. What is the buy point for Airbnb? Let's take a look at Airbnb. I've recommended Airbnb, but I'm not buying it yet because I do think it's going to pull back a little bit more. But I think I think that this one could be a big one. I didn't buy it when it came out initially, and the chart is a little bit. Let's look at the weekly chart. I didn't buy this when it came out, so there isn't really necessarily good place to buy it. There's been a fair amount of selling, as you can see this week. That's that red bar. Let's look at the daily to kind of look at it. Right now there is a buy point on it, and the buy point is 174.97. Now, the thing about this buy point is right now it's trading lower than that amount, so we have to be careful. We have to be careful. I would not necessarily buy this until we get a reversal, but what I would do on this one for Airbnb, and I do think it's a very good stock, is to set a buy stop limit order on the pivot price, which is, and let me give you that exactly. It's 174.95. Plus 10 cents, or 175.05. So that's where I would be buying. That's where I would set my buy stop limit order for Airbnb, and that area is right here. That's where you want to buy it. That's the level right there. That's that 174.95, and then I always add 10 cents to it, 175.05. That's your buy point for Airbnb, and I do think it's a really, really good stock. So right now, it's not at that level. Right now, it's currently, it's currently at 170. It's currently, right about there. So you possibly could buy this, tomorrow. But that's what I would do. Set a buy stop limit order, 174.95 plus 10 cents, 175.05. So that's where I would be a buyer of Airbnb. Well, I have gone on and on for about an hour here, and it's Friday. I'm so sorry about my technical difficulties here that I put you through. I wish that sometimes you just can't get a break. So I will be back on Monday. But if you want to get on the action trade alerts, and possibly I'm going to send out, if you get on the action trade alerts, I'll send you out a link to the trade that I made today, a little video, and to the trade that I made today on Discovery Networks. So it's easy. It's easy to do. Just subscribe to Action Trade Alerts. Just go to www.dallastradingfloor.com. And if you're looking on TikTok, just go to my profile, hit the link, and you'll see a little screen that comes up, first and last name, and you'll be on the Action Trade Alerts. I also have a direct link to sign up to get the slides for the trade that I made today on Discovery. So without further ado, thank you, everyone, and I hope that everyone has a very nice weekend. I certainly am going to try to myself, and happy trading. And the market, be careful with the market right now. It's in a it's in a correction. So even though it pulled up today, it's likely to pull lower next week. So be very careful. Try to get into cash. That's probably going to be your best bet. So till Monday at 2:30. Thanks everybody for taking a look. I'll see you on Monday.